The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I've had several requests to talk about the foreign exchange market. The first chart that I put up here was the euro. I was asked to explain, why I was friendly to the euro, i.e. the U.S. dollar going down yesterday, and I'll just walk through these few charts that I put together to let you look at this. As you can see, we have a perfectly symmetrical three drive to a top pattern, as you can see, as that market is moving higher. If we look and we took the other side of this and made a parallel line, in other words, just clone that pink line and just drop it down, you notice how it forms a parallel channel to the downside. But you'll notice on the last retracement, it did not touch the parallel channel. That usually means the market is getting stronger. In other words, it's starting to turn up in more like a parabolic curve. If you'll remember, one of the charts that we talked about yesterday in the room here for TFNN was this euro chart, and we'll put it up here again so we can take a look at it. This is the daily chart of the euro, and as you can see here, we were expecting this particular move to extend a little higher up around this 111.40 level. So far today we've been to 113.20, which happens to be a perfect 78% retracement from the high that we made at point C. The market has, since that has happened, has backed off about 70 pips and a little bit of profit taking early this morning. By the same token, if we look at the dollar index, and that was another one that we looked at yesterday, you'll notice that we have the number down here to look at around this 94.15 level as a potential, buying area. And we've been below 95 already today, hitting the 61% retracement already. So this is going to be very interesting support that we have coming in here at the dollar index at this 94 and change level, and also the resistance in the euro at the 113.30 level. The whole family was selling the euro up there at 113.20 today, which was the 78% retracement of that move that we just discussed. That's not the important thing that's happened, folks. Yesterday was the important thing. Yesterday, we hit the 1.27 expansion number in the Dow Jones Industrial Average to the exact number. I'm going to show you what we looked at yesterday. This was the fact that what we had coming into the market on Monday. That is what we were looking at, and I wanted to bring up what it actually did, because it was flat out, spot on, the 1.27 expansion. You'll see that here without any problem at all. Now, I'm going to go through these numbers, but all of these numbers were hit within 3 decimal places. That means it's within 0.001%. So these are spot on numbers. We hit a 1.27 in the Dow Jones Industrial Average. We hit a 1.618 expansion on the weekly chart of the NASDAQ that we talked about several times. We'll put that up here. This is the one that I had. We went a little bit higher. We went up to that number yesterday. We hit it right on the money. In fact, it was right after the open that we were talking about it, that it did get up there. It's backed off about 30 points, from that high. It's still a little too early to mean anything, but the fact that it hit it spot on is another one that we looked at. We also had the New York Stock Exchange Index also go up and make a 1.27 off of the previous number. Absolutely, again, spot on. And so that's just, the three. If we look at Germany, Germany made a 1.618 over the past month. And the Hang Seng, which was really an interesting one because that's a pretty good sized market. I'll put that one up here so you can take a look at it. That's completing a very, very bearish Gartley pattern on the long-term chart that you can look at. And you'll see that that also made a 1.618 expansion. And it also made a perfect ABCD. So those are the ones that are, really interesting. And then finally, the big six that I look at, the S&P cash also made a 1.27 expansion of that move. The S&P futures, of course, missed it by about 5 points. And you'll see what's going on. We have a question here. Take advantage of trading Forex over futures. Okay, I don't know if you mean futures in the foreign exchange. Is that what you mean? Mr. P, could you let me know that? Because there's a big difference in that. That's very important. Okay, this is very important. The question that he asks is, if you're trading foreign exchange, should you trade the foreign exchange rates that the 13 major Forex bank give you, or should you go to the Chicago Mercantile Exchange and trade the futures? Well, you have a choice. It works both ways, that you could do either one, but if you trade the futures in Chicago, you have some advantages and some disadvantages. The advantage is you're actually not paying a pip spread like you get in the foreign exchange. You actually pay a commission, which is around $4 in and out. If you trade that with the euro, that's usually a 2 pip spread, so you're being charged $20. They tell you it's free, but it's not. You're paying that spread, the bid or the offer, and that is a $20 difference between $4 and $20. That's the advantage. The disadvantage is the foreign exchange markets, the 13 major banks that make up this foreign exchange business, they have a liquidity beyond the wildest imagination you could ever imagine. They do trillions of dollars every day. I mean, it's just huge. Whereas the foreign exchange at the CME is rather small. But for a small trader, someone that trades 1, 2, 5 lots, something like that, 10 lots, that's not a big problem because it's got good liquidity for that. The second disadvantage is that they close. They close for half an hour right after the market closes, and why they do that, I don't know, because the settlement price could be hit when the computer button rings at 3:15 in Chicago, but they do close for about, I believe, a half an hour, and then they reopen. So that's a difference in the markets that you have. So the main reason is if you're a small trader and you're not trading 24 hours a day, the CME is certainly good enough for you to work with it. It's very good, especially if you're trading the big 6 cross rates. The euro, the pound, the Swiss, the Canadian, and the Australian, and the Japanese yen. All of those are fabulous. And of course, the euro yen, the pound yen, all of the big ones are fine. When you get into some of the others, like the New Zealand dollar and a few of the other exotic cross rates, that's pretty much what you're looking at. The second question that we're asking here today in the den is the thoughts on silver and gold. I am still negative. Silver and gold, I believe, are in for a pretty good correction. Today was very unusual because we ran up and we took out the highs of the last 3 days in gold by about $1 and immediately broke $17. That's not good price action, folks. You just take out those highs and collapse. That's not good. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart of silver here. As you can see that it could barely make a 50% retracement when gold took out the highs that we made on the 10th. In other words, gold was already pushing silver above 2050, and silver certainly do that. That's just an example of silver is rolling over more quickly than gold. Now, I've had 3 requests to go over what I said about the difference between the foreign exchange markets and the futures market at the CME. Let me give you a little bit of history. Back in 1972, the CME, under the guidance of Leo Melamed and his first assistant, who was none other than my best friend, Byron Tucker, put together the currency contracts for the CME. At that time, if you wanted to trade foreign exchange, there were 13 major banks, there still are, that report all of their trades. These are the Forex banks, starting with Citibank and Deutsche Bank and a whole bunch of others. There's so many of them I can't remember, but you know their names. Everybody has a foreign exchange operation. They give their quotes to a central clearing place, and that gives the quotes of what you're looking at. That's why when you see a spread in the euro of maybe 6 pips, it's because one bank is way out of line and another bank is way out of line. Where the actual pip spread is 2, they're showing it as 6. So if you were actually in a trade and you saw that click there, they could take you out because there was a reported trade at that level. That's one of the differences. Now, in 1972, in fact, you had to have $1 million account to trade foreign exchange up until 1972. And then at the Merc, they have their own contracts. These are specified contracts. They trade regular times. They are very, very close in price, very, very close. Now, there will be some carrying charges to be little tiny differences there, but they do have normal hours. They close at 3:15 Chicago time for settlement, for the CME, for all the stuff that they do there, and then they reopen about a half an hour later. But they do not trade a spread. They trade the actual value. So if you want to buy the euro at 112.91, you can put an order to buy it at 112.91, and you charge roughly $4 in and out for the trade. If you do that trade at the Forex bank, they're going to charge you the pip spread. They don't show it as a charge, but if you want to buy it, you have to buy at the offer, and if you want to sell it, you have to sell at the bid. Sometime that spread is 2, and when markets are real crazy, that spread could be as high as 20 or 30 in the euro. And the euro is thousands of times bigger than the stock and bond market, folks. This is a $1 trillion market. It's not a $1 billion market. So that's the main reason. So the second question someone asked earlier today was the difference between the gold and silver. I still believe that we are going to be going lower in gold. I'd love to be a buyer down at the 1275 level, but probably the next chance I get on that is when Moses returns with his friends. So I don't know when it's going to happen, but I still believe we got a chance. Silver is, acting a little less bullish than it was before, as we saw from the earlier chart. So that's another one that looks, really interesting. So I believe the numbers that we hit yesterday that I just referred to, all of the 1.27 and 1.618 numbers in the stock indices are certainly put together a nice case that we've hit some type of a very significant top. Whether it's going to be the significant top or not remains to be seen, but something of some dramatic proportion should happen in here just because of what's happening with the VIX index. The VIX index is historically lower than it was back in 2008 when Secretary of the Treasury Paulson was telling us the banks were too big to fail, or that the banks needed help and that they had to have billions of dollars of our money, which we did give them. And since that time, they have been given interest-free rates, basically by the Federal Reserve, to do with what they want. So with the Glass-Steagall Act out of the picture, investment bank and commercial banking are mixed together, and it makes it very, very interesting here. Now, we do have a lunar eclipse, and full moon is due on the 18th. We should have some pretty good trend changes within that time frame. We will look at it a little bit closer on the 18th because we could be coming down into that level. If we made a high on the 15th, we could be coming down 4 days. That would be a 4-day correction. And since the lunar cycle is a short-term cycle, it's only a 14-day cycle, that's a third of the way through the cycle. And so you could easily get a pretty good bounce from that level. So that's the thing to watch. I will try to get Shane Smolian on this week, and also I will try to get Norm Winsky on next week if I can. I'm unable to get Norm, our good friend Rich Anderson, on this week, but I am trying to get Tom McClellan on from the McClellan Oscillator. That is Sherman and Charlene's McClellan's son, who's been running the business for quite some time. So we'll see what's going on. Yes, I talked to Janet Yellen yesterday. She wanted to be on the show very much. She almost said, please have me on. And I said, well, you're going to be in Jackson Hole, and sometime the connections there are bad, so we'll have you on at another time. So we'll look at Janet Yellen maybe coming on right after the first. No, it's on the 32nd of April. That's when said she would have some time for us. Oh boy, better stop taking the medication. It's getting a little dippy in here. Okay, let's get on to the rest of the markets that we're looking at in here. We're having a very nice, like we've already completed this rally, I believe, in the euro up at that 78% level. So we should be watching some pretty interesting things happening in some of these other markets. Now, we talked about the grain markets a little bit yesterday. We did have that another 1.618 expansion in the corn market. That has moved up about 14 cents off of the bottom. And it looks like we got a rally that could extend all the way up about another 30 cents, and that would be to just go down and test the lows that we made, back in March before we had the really big rally. So those are the things, that we're watching from the grain market. The leader of this has, of course, been the soybean. The November soybeans have been the strongest. They had the best daily pattern, as you remember. We had that beautiful 78% retracement that was going on that acted, very, very nicely. I wanted to cover a couple of stocks here, folks, that look really interesting from the short side. The first one is one of John Logan's all-time favorites, and the second one is his all-time favorite. The first one we'll look at here is the Microsoft. This is over the last 2 years. And as you can see there, I've marked off the 1, 2, 3, 4, 5 expanding triangle patterns. These are the ones that were made popular by H.M. Gartley and also by Wells Wilder. But if you'll notice, just recently we have completed a 1, 2, 3, 4, 5 expanding triangle here in the Microsoft at the same time. And we'll see what's going to happen with it. But it certainly looks like it would be a place to get short softy up in here because the pattern is certainly complete. We'll see. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to go back into the foreign exchange a little bit because I spend a great deal of time there each day, looking for patterns. And the one that I put it into the Tiger Den just now is the, you can see it's a 3-drive to a bottom pattern in the pound dollar. As you can see, that 1.618 expansion ends down at the ABCD correction. That makes a perfect ABCD, and you're looking for the market to rally. So the buy is around the 128.70 level, and your first objective would be up around 129.70, which is roughly, $700 from where you'd entry. And on that particular trade, your risk on that risk would be relatively small, around 30 pips or under $200 to make 700. Now, if we look to see what happened to that particular trade today, you'll notice that we rallied up and we did get above the 129.70 level, which was exactly equal to the BC swing. That's exactly what it did. Just repeated itself over again, what we say many times. So those are the things, that we try to look at. I'm trying to build a case here to show you what I'm looking at in some of these other markets. But if we look at the same thing here in the Japanese yen, and we're going to look at this Japanese yen trade here for just 1 second, and I've got to put the number up here, and then you'll see it. This is a 4-hour chart, which means each bar is 4 hours. You can see we're breaking down. We should have some support at the 100 level, and of course, if that fails, we're looking at something, even a lot lower, and that's the real key to some of these things, because once they fail, they begin to move down even at a greater speed than you might think, and this is exactly what happened today. The next chart I'm going to bring up to show you here is the fact that the Japanese yen went right down to that 1.618 expansion, down to the 99.50 level, and has already rallied $600 from that point. Now, these are shorter-term moves, of course, but if you look at this dollar trade versus the Japanese yen, you'll notice that 61% retracement that was up around, the 107 level. That's a $7,000 move, folks, from the end of July to the middle of August. So these can be huge moves, as we all know, but they are very tradable. If you go down and look at your, daily chart and then move down to a 4-hour chart, and then go to a 30-minute chart and then to a 15-minute chart, you can, take your position and you can massage it a little bit to get closer to the best entry point that you can. Unfortunately, sometimes you have to stay up all night to do that, but that's the nature of the game. So that's what you really have to keep in mind. Now, we do have a request to talk about the other one that I wanted to see, which I know that Mr. Logan does not like, and that is Big Blue, also known as the IBM. And I believe that IBM is a short here, folks. Look at this. You've got 4 major ratios coming in there. You've got a 50% ratio from the high of 2015. You got a 61% retracement from the high of 2014. You have a 78% retracement from the high on 2015. And you have a 1.27 expansion from the high on September 30th of 2015. So you have 4 major ratios coming in here on the IBM. So if this is not a good sale, then I would assume that this is totally wrong, and we'll see what happens. But anyway, those are the 2 that look the most bearish of all the ones that I'm looking at. Well, there's a lot of them that look bearish, but the ones that look the easiest to me from a pattern standpoint are Microsoft and Big Blue, IBM. So that's the main thing. I have no love for IBM. It was the only job offer that I did not get when I was finishing my graduate school at Indiana. I was interviewed by IBM, and I didn't realize it was for software development, and I had to take the test for software development, and the two people that tested me told me that they had traveled all over the Big Ten schools, and no one had got a lower score on this particular test than I did. And that I think killed me for computers forever. So that's the main thing that I want to look at. However, the folks at IBM did not have this particular chart, and this is the interesting one right here. Take a look at this chart, folks. This is the Fibonacci time sequence chart. If you'll notice the time on that clock, you'll see it, 10:09. Anyway, these are the time sequences that people use, and if you'll notice, there's got to be a number for everything in here. That's basically the bottom line, and it's the hardest thing to do is to figure out time. I believe the time is an astrological formula. I have not found it. Shane and Norman and Bill Meridian have come closer than anybody that I know, but I just try to use the lunar cycles and some of the other things with the Bradley model along with the patterns to make the timing a little easier. But no one's ever been 100%. I doubt if anybody ever will be, and that's it. Now, Duffy, you're right. I remember because they always wore those cordovan shoes and blue suits with their multicolored blue ties, and that was 1962. And there weren't many computers back in 1962, so I had no idea what kind that test was, but I never worry too much about it, especially now. I'm in the 7 furlong of an 8 furlong race, so all I got to do now is just keep my record clean till I get to that big trading room in the sky. Alrighty, we have a situation now in the cattle market. I was talking to Rich yesterday about the cattle, and he wanted me to, he's not able to come on this week because he's traveling, but he did want me to share this cattle chart. As you can see here, we did get up to the 78% retracement. We made that bottom down there at 105. That was the last time, the time before this was Rich was on and said that should be some really good support. And we had many ABCD patterns forming at that level. And then we had that big reversal bar, on the 25th of July. And then the market gapped up and ran all the way up to the 78% retracement of the high from May, and also a 50% retracement from the high in April. And now we're looking at is a potential formation here of an ABCD structure that would take us down to this 109 level, which is near the old breakout level, which would be the 61% retracement of this whole move. And if we get that, that would be a good spot to look at cattle, because you'd have a lot of really nice clear harmony. And those of you that like head and shoulders patterns, you will have a really nice head and shoulders pattern from June 20th to July 20th, and possibly even the end of this month. It would set up a really nice head and shoulders pattern on a technical basis to make it look like it would be something would be pretty good, to look at. So that's the key, to looking at. Now, last night in the S&P, we got down to a 61% retracement at 2185. Now, for short-term purposes, and believe me, this market has been rallying, all along. We do have a potential for a, easy ABCD pattern coming in here at around, 2175. I'll post that into the room here so that we can take a quick look at it, and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've just completed an ABCD pattern in the crude oil market up here at this 46 level. That should give a pretty good indication that we might get some retracement from this particular level. Now, I did have some questions yesterday. We talked about the correlation in some of these things. I just wanted to show you quickly the difference between the correlations in these things. Now, if you take a look at this weekly chart of the S&P, you'll notice that the blue line, which is the crude oil line, has very little correlation on a longer term basis. Short term, it does have some, but very little. However, if we go down to a shorter term time frame, using a daily chart, you'll see that there are times where you have a really strong correlation in the market with the, just one second here, of the crude oil to the market, and I believe it's because of the financial press is talking about it. That's my opinion, because they say, well, the market goes up or down with oil, but if you look at it on a long-term basis, that's not really the case. To find a true correlation in something, you really need to look at something like the Canadian dollar versus the crude oil market. Here you're going to see a correlation that is really unbelievable. Going back over the last 10 years, you can see the correlation here is probably close to 80%, maybe even higher, except for the period between 2012 and 2013. I've marked that off in a red box, and you can see that the Canadian was moving down and oil was moving up, which was contra to what it usually does. That might have been a prelude to the fact that when they finally did get back in sync in the middle of 2014, that they did run together. So this is one that has an extremely high correlation over a long period of time, whereas the oil versus stocks does not really have that. And that's a huge difference when you're trying to look at some of these things, because you hear people talk about this, and unless you go actually in to prove it yourself, you're not going to get any really true answer, because defy human nature, and do the work yourself. Now, this is the ABCD pattern that I was referring to here in the market here for the crude. This is a 4-hour chart going back to early August when we made that Fibonacci retracement at 39. And we've rallied, over 20% now in a matter of a couple of weeks. And the first pullback would be equal to what the BC swing would be, and that was roughly $2.50. So that would take us down to around the $44, $43.65, $44 barrel will be equal to the same correction that we had from August the 8th through the 11th. Just a normal 3-day correction. If this is bullish, then that's about all you're going to get, and then you'll have another push to the upside. That's what it looks like in crude oil. One of the things that I focused on in the newsletter this past week was the fact that the oil complex, all of it, was looking very, very bullish, and that was the main thing. We got a caller from one of my favorite cities, Boston, Massachusetts. Jay, are you there?
Yeah, yes, I am. How are you, Larry?
I'm very good, thank you.
Terrific. You had a guest on, a woman. I believe she's an astrologer. Man, was she spot on. She gave us a stock, ACIA.
Yeah. That's Grace Morris, yes.
Yeah, I wanted to get her name again because they didn't write it down at the time. It's Grace, you say?
Grace Morris. We'll have her on again. She's a very, very lovely lady, and I've known her for many, many years, and she is certainly, very, very interesting. I have her phone number. I'm going to give it to you. You just give her a jingle, okay?
Yeah.
It's 815 464 8200. She's a really, really nice person, very, very helpful. And she was a good friend of my teacher, Dr. Ruth Miller, also. But Grace has been doing this for a long time, but that's been her home run. I mean, those of you folks that have not seen this stock, I'll try to post it after this next break, but it is actually, it looks like a stock of the tulip bulb mania from the 1600s. I don't think I've seen a stock that moved this much this quickly.
Yeah, and the thing is, I think it was an IPO, and she just said that they came public at the perfect spot-on right time.
Well, yeah, Duffy in the room has just posted the fact that remember it as a stock pick on June 15th, and here we are 2 months later. I don't know how much it's gone to, but it's just been going crazy. It's a company that it's in Massachusetts. It's in your backyard, Maynard, Massachusetts, and I'll try to post it, but I don't trade those kind of things. But it's just been a vertical move. That probably tells you that there's no short stock to take the other side of it. That would be my guess, because some of these firms don't have the stock to borrow to sell it short, and that might be the reason that you just don't. That could be one of the reasons, of course, but that might be one of the reasons why it's vertical. I mean, it basically doesn't even back off at all, other than pause.
Yeah, it's unbelievable, really.
Yeah.
I think she recommended it to us around 29. It's 101.82 as we speak.
Yes, that's good. I remember that. I got as much as I could get, but I couldn't find the one share to buy it.
Oh, wow! Holy moly!
It's moved up 5 times in just 2 months. Of course, when it comes down, it will be the same. But we'll have to wait and see. But that's been a monster stock, no question about it. It has been. Basically a vertical run. I'm going to put that stock in here at the break, to let the folks take a look at it, because I did put it on my watch list, only I didn't follow it as nearly as clearly as I should have. Hold on with us just a second, Jay. Holy cow, look at the gaps all over this thing. Wow, there it is, boy. 29. Look at this thing. This has been oh my gosh, look at these huge gaps. Let me put this in here so the folks can take a look at that. We should have her on again, I think, because we'll see what's happening. We're trading at 100 on this thing. My goodness, what a heck of a move that was.
Is that her forte, IPOs?
She's really good, as she's a very good classical astrologer, for one thing. And then the second thing is she's really good with the market itself. She's done a great job. She understands the Bradley model as well as just about anybody, but she has a tendency to be on the bullish side, and for the last 10 years, that is the best tendency to be in, But as you can see from this chart that I posted in here, it must have had some type of an earnings announcement back on the 12th of August, because it gapped up $28 and then it came up. This is an exhaust move, in my opinion. You see the little retracement we had back at that $30 level. And then since that time, it's just been moving the one way. But I'm sure it's tradable.
Yeah.
I just don't know if there's stock available on the other side if you did wanted to try to, if you wanted to try to sell it. But I don't see any reason to sell it here. This thing is just a moonshot, and there's just so many other things you can trade that are easier. You don't need anything like this.
Yeah. It's a marvel, though. It sort of points to the accuracy of the way she looks at things and the way, well, you too, and Shane and Bill Meridian and Norm. It's remarkable to see that this is a whole hidden side of looking at.
Yeah, it really is. I mean, there are a lot of people that do it, but they don't say too much about it. And the reason why I know is because I sell books to them, and so I wonder who they have looking at astrology stuff. But you'd be surprised that people in MIT and other places buy these books because they're interested in the type of work that is being done.
Can't argue with the results. Yeah.
Hey, thanks for calling in, Jay, and have a wonderful day, okay?
You too. Thanks, though.
Okay, bye-bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. My final chart that I posted in here to Tiger TV. I know I've had a couple of requests to talk about the dry shippers and also a couple other stocks, but I'll cover those tomorrow. But the main thing here is to look at these Treasury bonds and Treasury notes. As you can see here on this 4-hour chart of bonds, we've been in a downtrend with lower highs for quite some time, and it's very unusual for stocks and bonds to be dropping together. So whether that's a factor of all these 1.618 and 1.27 numbers hitting on a long-term basis or not is important. That I'm not quite sure, but just remember that doesn't happen, very often to see bonds and stocks drop together. Usually there's a flight to quality in one or the other, but frankly, the bonds have very little quality when they're not giving any interest at all. So, well, very little, if anything. So keep that in mind. Also, we are backing off a little bit more now in the gold. We're down almost $17. It's got to stop right here if gold is going to be any good at all, because that's the 78% retracement of this last swing down here at the 1346 level. If we break below that, then we're going to start heading down, and I believe we still are heading down to the 1275 level in gold and $18 in silver. As we said, looking at that silver chart, it really looks quite negative with the lower highs that we've had and barely able to make a 50% retracement when gold took out the highs of the last 3 days. That's another sign that would make you, a little interested to be on the short side rather than on the long side. So that's what we're watching so far today. We want to keep an eye on that. Tomorrow, I'm going to do a few more stocks that people have been asking me about, and we're also going to be looking at some of the indices that have brought this market to its heights and also to some of its corrections, particularly the biotech index, the small cap, and also the banking index. We need to take a look at those tomorrow to get an idea. And folks, if you do nothing else this week, listen to Basil's show tonight, because believe me, it is worth every single second that you listen to it. He does such fabulous research. It's entertaining, not just informative. Who loves you? Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.